Donald Trump won the presidential election and the markets have spoken. Stocks, gold, Bitcoin, what's the outlook and how should you prepare? We're joined by financial expert Jim Rickards to dive into what's next under a Trump administration and help us make sense of the financial landscape ahead. And his new book, MoneyGPT, comes out tomorrow. So Jim, thanks again for joining us. Let's go rapid fire through some of these. What's your outlook now for stocks?
Well, it depends on the time horizon. So the immediate reaction to the Trump election was stocks took off, and with good reason. His economic policies, less regulation, drill baby drill, basically getting rid of wasteful investment in what I call the Green New Scam, which Donald Trump picked up on. We're very happy about that. But yeah, so he has a lot of things that are going to be very good for stocks. However, there's something bigger than Trump. There's something bigger than the electoral process, which is the economy itself. Economy kind of goes its own way. I mean, one analogy is, you're turning an aircraft carrier. I've been a pilot of a lot of boats, not an aircraft carrier, but you turn the wheel, nothing happens. It takes a while, and then eventually the boat turns around. So if you said a year to 3 years from now, would the economy be a lot stronger, a lot better, and will stocks be higher under Trump? The answer is yes. But for the next 6 to 9 months, we may have to get through a recession. The business cycle has, goes its own way, and there are a lot of signs of recession out there. So we may get off to a rough start, but same thing happened to Ronald Reagan in 1982. He had one of the worst recessions in U.S. history, but finished with very strong growth toward the end of his first term and into a second term.
Jim, it's been interesting that, Bitcoin has gone up today, it's at its all-time highs. Obviously, part of this is just a friendliness from the incoming administration toward Bitcoin, but it also, theoretically at least, addresses a lot of our money printing concerns over the long term. What is the future of Bitcoin? Is this something that we should be looking into as we go into the Trump administration?
Well, it's funny. I've studied Bitcoin for a long time. I was in Bitcoin versus gold debates. Leave aside whether that's a sensible comparison, but I've been doing those since 2010. I read Nakamoto's paper in 2009. I understand the math. I understand everything about it. I make the point that the designers of it, Satoshi Nakamoto, whoever, were very good at applied mathematics and engineering, didn't seem to know very much about money. So here's the thing with Bitcoin. It took me a long time to figure this out. It's like a casino chip. So you go into the casino, put your money on the roulette table, croupier gives you chips, you bet them. You can win or lose, but whatever you have left at the end of the evening, you take them over to the cashier and you get cash and you leave. The problem is if you walked out of the casino with your chips, they wouldn't be worth anything. You couldn't buy a cup of coffee with them, and it's not really a form of money. So in the Bitcoin world, the price is at an all-time high. It's been up. It's crashed 80%. It's rallied multiples, several 100%. So that's all good. But it's really just a form of gambling. I don't really think of it as an investment. There's no use case for Bitcoin. Now, can you make money? Absolutely. And a lot of people have. So my attitude is I'm not a Bitcoin basher. I just say, hey, it's an old rock and roll song from the 50s, shout, shout, knock yourself out. I mean, if you want to buy Bitcoin, knock yourself out, do it. But I don't really think of it as a form of money. There are a lot of technical reasons for that. There's no debt. Most money is debt. If you take a $20 bill out of your wallet and look at it, read the contract, it says Federal Reserve note. A note is a form of debt. It's a liability on the balance sheet of the Federal Reserve Bank. That's true of almost every form of money. It's usually somebody basically taking government debt and giving them something that they can spend. Bitcoin, there's no debt. There's no debt market. It won't serve as a reserve currency. So it's there. It's interesting. People like it, and people can make money at it. Could go higher, could crash, but I don't really think of it as a viable form of money.
All right, so you've been in the Bitcoin versus the gold debates. So Let's go there. You also had a book, The New Case for Gold, a few years ago. So gold, it's still around its all-time highs. It's backed off a little bit since then. But what's your case for gold right now?
Gold is going to go much higher, and here's the reason. First of all, when people say gold goes higher, what they literally mean is the dollar price of gold is higher. So 2,000, now it's around 2,700. Give or take. It'll make its way to 3,000, eventually 4,000, and eventually much higher than that. But what's really going on? It's not that gold's getting higher, it's that the dollar is collapsing in front of your eyes. Now, if you compare the dollar to other currencies, right now it's very strong. There's something called the dollar index, DXY. it's pushed it's going up a lot. Dollar is stronger against the euro, Japanese yen, Chinese yuan. So currency to currency, the dollar is getting a lot stronger. But that's kind of irrelevant because they're all currencies. They're all central bank notes, as I just described. If you really want to understand what's going on with the dollar, look at the dollar price of gold. And when the dollar price of gold goes 2,000, 2,500, 3,000 or higher, which it is, what's really happening is you're watching your dollar evaporate. You're watching the dollar crash relative to a hard asset. So what's the case for gold going higher, even though I just described it as the dollar collapse? Central banks are net buyers. That had not been true for decades, beginning in 2010, that term, but that's accelerating. Russia's buying. By the way, Russia has a particular reason for buying, which is the U.S. froze $300 billion worth of lawfully purchased treasury notes that Russia owned in their reserve positions after the special military operation in Ukraine. We're now in the process, the Biden administration is in the process of stealing $50 billion of those assets to make another loan to Ukraine. So watching the U.S. freeze treasury securities and then steal them, does it make you want to buy treasury securities? No, it makes you want to buy gold. So Russia has quadrupled their reserves in the last 14 years. China, same thing, quadrupled their reserves. Japan, Kazakhstan, Vietnam, Mexico, Philippines, Turkey, Iran, even though Iran's not transparent, they're all buying gold. And part of it has to do with the BRICS. They don't have a new currency yet, but they're working on a new payment system. So gold is a way to settle up trade balances. But the main reason is people are looking for alternatives to the dollar. I'm not saying the dollar is going away. You can't get totally out of the dollar. It's too big for that. But at the margin, you can buy gold. So what that means for a retail investor or anybody else, you've got kind of a floor under it. You've got the central banks buying a quarter of annual output. So that's going to put a floor under it, and then you can kind of just go up from there. So those are my favorite kind of trades where your downside's limited, but your upside's practically unlimited.
Well, Jim, I want to look at Donald Trump right now and his administration, because you said the final number for him in the Electoral College would be 312, and that is exactly what it turned out to be. So what have you seen now already as the Trump administration moves with its transition team, and what do you want to see moving forward?
Well, looking at the transition team, I think is doing a great job. I mean, we've got some big, Susie Wallace as chief of staff, Elise Stefanik as ambassador to the United Nations. By the way, I haven't heard any apologies from Mark Cuban. He says that Trump can't deal with strong, independent women. Well, his first two choices were strong, independent women. So
and he deleted all of his posts on X about Kamala Harris today, too.
Yeah, well, it's too bad. You can't delete the internet. We all know what he said. But Lee Zeldin for EPA, Steve Miller for, I think, maybe deputy chief of staff, but he's going to have a very broad portfolio. Tom Homan for, they haven't specifically said Customs and Border Patrol, but he'll be a czar. Very strong on deportation. And, you'll never, just as a practical matter, you'll never be able to deport 12 million people, but if you could deport the 2 million worst, the criminals in their home country, the criminals in the U.S., terrorist watch lists and others, that would be a great start, and they're very determined to do that. So I think they're off to a good start. Having said that, what I'm watching is the resistance. I remember in 2016, right after the election, people were shocked. By the way, I predicted that Trump would win in 2016. I think there were 5 people who did that, but I was one of them. But they announced immediately we're the resistance, as if they were the French resistance risking their lives. They're basically just a bunch of paper pushers with social media accounts, but they're very powerful because they're entrenched in the bureaucracy. So we've seen 4 states already announced they're going to have special state laws. We've seen people basically forming informal groups to push back on Trump. So here's the question. The resistance is there. The transition team is off to a good start. But are they going to really clean the house? In 2017, Trump did not drain the swamp because he couldn't find the swamp. Now he knows where it is. It's in the Plum Book. That's the government printing office book that lists 8,000 jobs where the president can pick anyone he wants, kind of not affected by civil service. Some require Senate confirmation, but they're the president's picks. I know I've been in touch with some transition people. They've done a much better job of identifying those. And at least so far, they're off to a great start. So I think Trump's going to prevail, but it's a very tough fight and the resistance is real.
Well, as I mentioned off the top of this segment, you have a new book, MoneyGPT, coming out tomorrow. It's AI and the threat to the global economy. So what can people expect from the book?
Well, thank you. Yeah, you order it on Amazon, Barnes and Noble, and it'll be in the bookstores tomorrow morning. It doesn't bash AI. AI is very powerful. And by the way, it's here now. It's not like, oh, it's coming in 5 years. It's here now. It's on your car dashboard. It's in your refrigerator. It's in Alexa, Siri. It's everywhere you look. So it's here. And it'll do a lot of good, and it's very powerful. But there are some dangers. And what I really do in the book is I warn about what those dangers are, particularly with regard to the stock market. Because one thing about artificial intelligence, it's not intelligent. It's all math. It's not your friends. We have a tendency to anthropomorphize. We give it human characteristics. It's just math. It's just a bunch of nodes and layers, and outputs become inputs of different layers. I mean, I've designed AI systems. I know how it works. So it can do a lot of good. But in the stock market in particular, there's something, it's called the fallacy of composition. It sounds complicated, but, you're at a baseball game, for example, and you don't have a good view because the person in front of you is wearing a big hat or whatever. So you stand up, and you get a better view. But what happens next? Well, the person behind you stands up, and the person behind her stands up, and so forth. The next thing you know, the whole stadium's on their feet, and nobody's better off, and everyone's worse off because everyone's standing up. So that's an example of how a strategy that does work for an individual fails catastrophically at scale when everybody does it. Same thing in the stock market. If you have a stock market crash, and in March 2020, the stock market fell 30% in 1 month, the fastest crash of that magnitude in history. People have a tendency to sell everything, go to cash, go to the sidelines, wait it out, and then tiptoe back in. That can be a very good individual strategy. But if everybody does it, you have all sellers, no buyers, stock market blows through the circuit breakers, goes through the floor, and you actually have to close the markets. So I describe how that happens. You don't need a mastermind or an evil genius or anything. It's built into all the systems. So I'm warning people about that. Look out for it. I have some recommendations for regulators and others as to how they can mitigate that using cybernetics. But, instead of slamming the brakes on an icy road, why don't you just tap the brakes? There's a way to do that. But I also recommend having some non-digital assets, so gold, silver, fine art, land, natural resources, alternative investments, things that will not be affected by the kind of market crash that I'm warning about.